Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of CrowdStrike, ticker symbol CRWD. And so here I am recording this on Saturday, July 20th, after CrowdStrike closed the week at $304.96, being down over 11% on Friday and being down even more than that over the past couple weeks, coming down from a high of $398.33, which was the 52-week high hit on July 9th. So we have seen a pretty big pullback. It does look like this blue line here is the 200-day moving average. It does look like CrowdStrike may be bouncing from there, as it did hit a low on Friday of $290.10. So it bounced about $15 from there. So, looking pretty good there. But, the big reason for this is because CrowdStrike caused a massive outage and its stock price has crashed. And so, people are asking, should we be buying CrowdStrike? And so I just wanted to go over a few things that stand out to me. I think that this is the beginning of CrowdStrike moving down much further over the course of the next many months, if not years. But I do think there could be some bounces along the way. So, I would look for those. Maybe we saw one here that has completed and we see price continue down. But yeah, I just wanted to give you a breakdown of why I think the stock price is going to go lower. And that is actually going to be based on some analysis that I've done on the weekly time frame. And because it's weekly, I'm actually going to remove the moving averages there, and I'm going to pull up my drawings because, I think there's something really interesting here. So I looked at the chart on, I believe, either Thursday or Friday, noticed that there had been this pretty big pullback and that we've seen this big up move following it. So we had reached highs in 2021, pulled back to lows in 2023, and now, in 2024, we are up just following having hit new all-time highs. And so, this retracement that I've done here, just going from the all-time low of $31.95, which was hit in March of 2020, and then the high over here, $298.48, hit in November of 2021. And so from that Fibonacci retracement, what we can see is that price pulled back to the 786, which was at a price of $88.99. So, I'm wondering if we're going to see a retracement to the 786 now, kind of repeating what had happened before when it hit this low at the beginning in January of 2023. And so I have this other retracement that I've drawn here in gray. I'm just going to make it yellow so we can see it a little bit better. And so that retracement is based on this low that was hit the second week of January 2023, hitting a low of $92.25. And so from that low, hitting the recent high of $398.33, we can see that price has dipped down below the 236, which was at a price of $326.10. Currently trading below it. I'm wondering if it's going to bounce, maybe get back above that level, but in the long term, continue down to the 786, which would be at a price of $157.75. So, that's where I think price ultimately is going to be going. But there are some other factors, some other things I did want to touch on that I do think support that, but also support the case that there will be bounces on the way down. And so one of those, I had just gone over the 200-day moving average, that it does look like we got a bounce from that level. Also, this prior high that we saw at right around $300 does look like we got a bounce from that. So what I'm thinking will be happening, maybe we consolidate at this level, maybe we reclaim the 236, but ultimately I think that's going to form a bear flag, or you could view it here as this being a left shoulder, a head here, and then that we will be forming a right shoulder over the course of the next 6 months or so before breaking lower. So, I see that we are at support now. Multiple factors suggest that, but I don't think it's going to be long-term support. And when we break lower, I think ultimately there will be stair steps down, bounces down, but we will be getting to right around $160 a share. And there are some other things that stand out to me as well that could support that. One being, or really just being multiple measurements that I could do. One going from the low here up to the top here. That represents about $265 to the upside, around 800%. And so if we take this measurement and just move it here to the lows, we actually, surpassed that 265 getting to the top here, but we did not get, an 800% return there. But I feel like that's also just a factor of diminishing returns, so I have to consider that there. But if we do take this retracement up to the top there, that would represent, let's see, about a 330% move to the upside. And so I think that very well could be complete because we have gone past that $265, representing, a measured move there. And we can also do the exact same thing, but for the downside. So here I'm just taking a measurement from the top here to the low. That represents a drop of about $206, coming down about 70%. And that's also over the course of around 420 days, or, a little over the course of a year. So, I could see CrowdStrike coming down about $200 over the course of the next year, maybe 14, 15 months, something like that. And so if I move this measurement over to the top here, where does that bring us to? That actually does not bring us to the 786. That brings us just below the 618. And another thing that I can do with this Fibonacci retracement is I can add the 65% retracement, and that would represent the golden pocket between the 65% and 618. And that is where we see price returning to. But just like on the way up, we went past that measurement, on the way down, we could as well. So, I think that price will be coming down to right around $200 a share, if not going even lower to around 160. And when it does come down to 160, I do see this consolidation here that could be acting as support if price does get that low. So, I find that to be pretty interesting, that over the course of the next year, I'm very curious to see where CrowdStrike will be. I feel like there's been a lot of confidence lost in the company, that it is not needed. If we can see such an outage by, a little blip, why do we even need them? I think that they're going to lose a lot of business and the stock price will come down. But before I close the video, I did want to point out how much lower we have come from the all-time high, about 24% to current price, coming down to the low that we saw over the past week. That's about 26%, 27% to the downside. But yeah, with this big drop that we have seen, I'm just going to do that measurement again here so we can see it a little bit nicer. Yeah, about 27% there over the course of 10 days, so not even 2 weeks. We saw this massive drop. I think that if we see any consolidation, any reclaim of the 236, that will be bearish consolidation, and this will be continuing down. But of course, I could be proven wrong, but I just found the chart really interesting considering those Fibonacci retracements, the measurements that we did come back to the prior high, and seeing that 200-day moving average potentially acting as support right now. But, I think it's going to be short-term support, and we will be seeing lower prices in the coming months. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.